Hi guys, good afternoon and welcome to Your Stocks. I'm Pavitra. With me is Ekta, and it's turning out to be quite a good session, right? I mean, we're over 120 points in the green right now, considering that we didn't get a very good handover as well. So we're really looking quite good on that. The Nifty Bank has also moved higher. It's up 110 points right now. Mid-cap's a little bit flat, but you know, the advanced decline is quite solid, over 3:1 right now. And it is that the IT stocks in the past few minutes which have really come up with a good gain. In fact, that sector is the best performing index also right now in terms of sectoral indices. So all in all, it's looking like quite a good session ahead of the big Q that we have tomorrow.
Hi Pavitra, absolutely. The big Q tomorrow will be the RBI policy. But as you can see, the markets have, or the Nifty has managed to hold above 17,500 quite distinctly through the trading session. The high point of the day was 17,545. So we're very close to those levels, so that momentum really has been maintained. And the mid-cap index, though it's been in the red for most of the trading session, has not seen any kind of further deceleration. So it's still trading with a cut of around 0.2%. We have an advanced decline ratio. As you can see, the graph went by just a couple of minutes ago. That breadth of the market has been maintained the entire trading session, indicative of the optimism and the momentum in our markets on the bullish side. But we do have a lot of queries lined up today, so let's get to that. Today, this afternoon, we have Parthiv Shah, who's the director at Tracom Stock Brokers, joining in on the fundamentals, and Rajat Bose, who's joining in to talk about the technicals of the market. Welcome to the show, gentlemen. Let's get to the first query. We have S. Venkapat, who writes to us from Kerala, holds 80 shares of Wipro, which is bought at around 579 rupees per share. He's a medium-term investor, wants to know what to do, whether they should hold or sell that particular stock. Well, the stock has significantly corrected from the buy price. Rajat, what would you recommend for a couple of these IT stocks, considering that you've seen so many cycles on a technical basis? What would one do with Wipro? Would you hold on and ride through the storm, and maybe it'll exceed the buy price as well?
I have very faint hope as far as Wipro is concerned, because other tech stocks are not doing that badly, but this one, even in the recent past, this 4 or 5 sessions that it has moved up, I did not see any positive divergence on the RSI or even in MACD. So chances are that this is actually this rally is likely to fizzle out, and there are much better tech stocks available at the moment. If you enter into them, I think the investor can actually make much better money. Personally, I prefer tech stocks for the simple reason is that the return on capital employed in tech stocks are much better compared to the other sectors. But this one is not the right stock to move into. There are pretty much good stocks. I personally hold Oracle Financial Services, L&T Technology Services. These stocks are much better compared to Wipro. So the investor can get into large cap stocks like Infosys, or may get into the stocks that I mentioned. It's not that I invested, so he has to invest. Not like that, but Wipro is definitely not the choice.
All right, Wipro is not Rajat's choice to play the IT pack. Parthiv, coming to you as well on this, do you agree? And you know, on this call on Wipro, how would you look at it over there?
Because if you look at the past track record of Wipro in terms of its growth trajectory in constant currency terms, I think it has languished, and as compared to its other peers, which is especially TCS, Infosys, and HCL Technologies, it has always kind of stayed behind. And despite all the inorganic growth that they've done so far, you know, somehow it has not materialized into better growth run rate. And even in terms of margins, it is not that it's in the top tier. It hovers around 17-18%. They have high attrition rate, and even in the last quarter, in terms of the total contract value, it was nothing, you know, anything positive. And that's the key reason why this stock stays at relatively lot lower valuations. I think we are far more upbeat on a stock like Infosys in this space, despite all the headwinds in terms of the macro challenges that these IT companies have already talked of in terms of they might face. But I think Infosys has really done extremely well in terms of mining clients, and their deal pipeline looks extremely strong. And I feel that that it's better to switch into Infosys for a longer horizon as well.
All right, got it. That is the call coming in on Wipro. I think both of our guests agreeing that perhaps Wipro is not the best play within the IT pack. But the next query comes in from Rakesh Bhatnagar, who writes to us from Ghaziabad. He holds 1,450 shares of Vedanta, which he bought at 308 rupees per share. And he also has 700 shares of Rallis India, which he bought at 196. Vedanta, by the way, currently at around 284. Rallis is around 200 rupees right now. Parthiv, coming to you on this, how would you look at it? I mean, Vedanta, and also take us through your call on, overall this commodities play that we've been talking about.
I think Vedanta has no doubt one of the fantastic mines in terms of the non-ferrous, especially they have a very good zinc mine via their stake in the Hindustan Zinc. They have very good copper smelter. They are very good into aluminum as well. They also have crude production thanks to the Kane acquisition they've done previously. So I think it's a very well diversified commodity conglomerate, and no doubt their operational efficiency in terms of the cost of operations of mines are one of the lowest. The only concern is the parent entity, the Vedanta PLC, because it is always having a lot of cash crunch, and because of the debt liabilities that they have to service, what they tend to do is entire cash generation that happens at Hindustan Zinc, which is again passed on to Vedanta, which is again passed on to the parent. I think a lot of dividend is paid. No doubt, I think it's very lucrative for Vedanta shareholders because every year they're getting extremely high dividend yield. But then, that kind of has a very big question mark in terms of the future capex roadmap that they have. They've already announced a lot of capex. Whether that will happen with a lot of incremental borrowing is the concern. So we are not very upbeat on a lot of such commodity plays, especially the non-ferrous plays at this juncture, and especially not Vedanta. I would prefer Hindalco in this space because their operational efficiency is far better, and their expansion is coming not at the cost of very high debt on their balance sheet. Their foreign assets, especially the US companies, are doing extremely well. So we prefer Hindalco at this stage. Talking about Rallis India, I think in the agrochemical space, I feel there are a lot of the better names. Despite being a Tata Group pedigree company in the agrochemical space, especially in the herbicides and fungicides, Rallis has kind of been behind in terms of their performance. They always had a lot of inventory challenges, and even margins are not up to the scale. So in this segment, we prefer Sumitomo Chemical. Again, I think it's a Japanese conglomerate which has kind of merged all its entities into the listed space. And again, every year they are launching new molecules. They're very upbeat, and they're also looking at India as an export hub. So they are going to go for expansion as well. So we prefer Sumitomo Chemicals in the agrochemical space vis-a-vis Rallis India.
Okay, all right. Rajat, would you have a recommendation on these stocks?
I would broadly concur with what Parthiv has to say. I mean, I agree that both the stocks actually should be sold on rallies, and Vedanta particularly I'm not very upbeat, although it has got 20 rupee dividends that is coming, but dividend is no longer tax free, so doesn't really matter much these days. I would say that one needs to see whether it crosses 300 mark. There is the 200-day moving average is actually located there. If it fails to do that, then one should seek an exit. And same with Rallis. Rallis chart is even worse. I would say that both the stocks should be sold on Rallis, and whatever Parthiv suggested, those kind of better companies one should get into.
Okay, got it. That is the view coming in on Vedanta and Rallis India. The next query is from Akshay Singh, who writes to us from Gurugram. He has 300 shares of LIC India, which he bought at an average price of 700 apiece. He's a long-term investor, and he wants to know whether he should hold or sell at current levels. Parthiv, he's bought at an average price of 700. He is willing to hold for the long term, but this stock has corrected a lot, right? It's down around 35% from the highs, 22% this year itself, but that's pretty much the entire insurance space. How would you look at this one in specific, LIC?
Despite very lackluster performance since its listing, I am really tempted to suggest him to hold to LIC because his acquisition cost has come at a pretty decent price. In terms of price to embedded value, it is quoted around 1.2 times. And more importantly, I think LIC is changing its product mix. And more importantly, I think because of the more weightage on the non-par policies, I think that will help to improve the value of new business margins, the VNB margins, because one of the key reasons why LIC, despite being the market leader, having the dominant market share of upwards of 50% in the life insurance segment, they didn't get the valuations was because of the VNB margins. And as and when they show tremendous improvement in that, I'm sure if not at par with the private sector peers, but at least it deserves a price to 100 value in terms of forward basis of around 1.5 to 1.8. And that will be substantial re-rating from the current price levels that LIC is quoting at.
Okay, so 549 currently for LIC, but let's get to another query in. We have V. Badri Narayan, who writes to us from Mumbai. He holds 20 shares of Afle India at 1,348 rupees, an average price since Jan of 2022. He's a medium-term investor, wants to know what should he do with the stock, whether he should hold or sell it at this point in time. Rajat, what would your recommendation be on this particular stock technically?
See, Ekta, since March, that is last month, it has actually posted 3 lows around 925. If that level gets broken again, then one would do well to actually exit the position. And if somebody wants to carry on, the maximum excursion on the downside one should see is up to 900 levels. Below that, there is no point absolutely to stay on in this stock. And the stock, the intermediate trend is down, firmly down, and there is no such sign that this is actually going to, in the recent past, I mean, you see, day before, the last 2 trading sessions we have seen this stock has been falling, including today's one. So I would personally suggest to exit this stock if it were to fall below 924. Otherwise, if one wants to hold on, maximum excursion 900. No redeeming feature till such time it takes out 1050 mark.
Okay, got that. That is on Apple. Unfortunately, looks like the buy price is pretty high over here, considering you bought at 1350 almost. But with that, we are going to get into a short break. When we come back, we have lots more stock queries that we're going to answer, so stay with us.
Welcome back. Well, for the Bank Nifty holding up with a gain of around 0.4%. Overall, you'd have to say that it's quite a quiet trading session in today's trade. We are holding. There is no kind of intraday volatility which has set into the markets, and we're going into the MPC quite steady and strong at this point in time. Just watch out for the Nifty PSU Bank Index, because despite the Bank Nifty managing to hold its head above the water, there is some amount of pressure which is coming into the entire PSU Bank Index. So that should probably show up for you as well. Well, let's move on and get a couple of more queries. We still have with us Parthiv Shah and Rajat Bose to answer all of the questions this afternoon. Anirudh Sharma writes to us from New Delhi. He holds around 200 shares of Bandhan Bank at around 400 rupees. Long-term investor wants to know what to do with the stock, whether he should hold on to it or exit and book his losses. The stock has fallen, and today it's reacting, however, to its quarterly update. So, Parthiv, what would you recommend on Bandhan Bank? It, currently at around 200 odd rupees. Quarterly update doesn't look too bad. What's your indication?
Ekta, no doubt the banking sector is looking good overall, and no doubt I think in terms of a lot of changes that are taking place, especially with the recent finance bill, where I think government is showing clear-cut intentions that they are more comfortable with people having their savings in the bank fixed deposits, and that is really going to help the banks to get their liability franchise in place to lend further. And in terms of the banking space, no doubt, I think we're not very upbeat on Bandhan, because a bulk of their book comes from the microfinance space. And in terms of geographical concentration, also we are not very comfortable with the book being there. And the bank has announced that they will do a lot of capex in terms of new branches. So we believe that the cost to income ratio will not be favorable for some time, and always there's a probability of some asset going bad. And no doubt, I think in terms of their ROAs and ROEs, they're looking good. But again, we know for the fact that it's more because of the MFI space. They had acquired Group Finance, which is taking more time for integration, and that has also not really scaled up. And the peak valuation that the bank was quoting at around 5 times price to book multiple has really come down. But But we feel that in this space, it's better to go with the frontline names. They're taking more market share, names like Kotak Mahindra Bank or Axis Bank, or for that matter, HDFC Bank. I think over the next 3 years, the outlook looks extremely bright. They have very good CASA, and I think they'll be outgrowing the industry.
All right, that is on Bandhan. And Rajat, let me come to you on this one as well. His buy price is almost double of the current price of the stock. Even if he's a long-term investor, do you think this one is okay to hold on to?
No, I would broadly concur with Parthiv again. And the reason is that the stock is almost, for the last 1 year, it has been falling, intermediate uptrends notwithstanding. This is falling on weekly chart, on daily chart. This is looking bad. And I would suggest that if one doesn't switch over to a leading bank, say HDFC Bank or Axis Bank or say Kotak Bank, then one can actually choose IDFC First Bank. That is actually doing much better than this one. So personally, if I were in his shoes, I would have switched to IDFC First, because their recovery of my money would have been faster compared to Bandhan. Bandhan is not looking good at all. It can even go further down.
Yeah, I mean, it's down 12% in just 1 month, right? So that is the kind of pressure that you've seen even off late in Bandhan Bank. The next query is from SK Bhatia, who writes to us from Punjab. He holds 1750 shares of Yes Bank at 32 rupees and 1200 shares of EIH at 59 for over 10 years. He's a long-term investor and he wants to know whether he can hold these stocks for 1 year more. That is the kind of time horizon that he's looking at. EIH, he's saying that he's holding for the past 10 years, so it should have been maybe around 80 or 90 rupees when he bought it. Rajat, coming to you on both of this, on EIH and then Yes Bank. We always have a query on Yes Bank whenever we do this show, so take us through your call on both.
I would say that if EIS were to take out 170 decisively, that means at least weeks stay above that level, then probably there would be a reversal of the intermediate downtrend which began on last September. EIH definitely is a hold with a stop below 150, but the other stock, which one was the other stock you said?
Yes Bank and EIH, yeah. EIH you've said for Yes Bank.
Oh. Yes Bank, it's a capital destroyer. I for one, why do people get into this kind of a stock? I simply don't understand that. You get to hear, can I buy Yes Bank and it will multiply and so on and so forth. Yeah, I have said in this program at least at least a couple of times in the last 6 months that you get into this kind of stocks, 1 in 20 will perform greatly. You will make a lot of money there. 2 you would be moderate return, and 17 will be capital destroyers. So why get into this kind of stocks when there are better stocks? Yes Bank is no good. I would not touch it with
But Rajat, do you see lower levels for Yes Bank?
Yes Bank is awful at the moment. I would suggest that you better not get into Yes Bank. You will see lower levels, because if it fails to take out, say, the level, the supply zone between 16 and 18, it will come down and get past the recent low around, say, 14 or something. There is no point getting into this kind of a stock. And the 50-day, 200-day moving average bearish crossover actually suggests that there would be further lower low than the recent low. That's
okay, all right. So Yes Bank is a no, and the idea of going into a stock which has seen such sharp declines is basically what Rajat is against. It's not specifically Yes Bank, it is the entire larger picture as well, which he does not propagate. But nonetheless, Vara Prasad K, he's another person writing in from Hyderabad now, holds 93 shares of Divi's Laboratories at an average price of 3779 and 135 shares of Globus Spirits at an average price of 1122. Long-term investor wants to know what to do with the stocks, hold or sell these particular stocks. Well, deep pain and gashes coming in on a couple of these counters. So Parthiv, what would your recommendation be? Divi's is a nifty stock. What would you recommend on that one? And for Global Spirits, it's recovered from the 52-week low, but nonetheless, any further upside?
See, Divi's Laboratories has seen a lot of pain from its peak valuations when it was quoting at around 55 times. Almost it had touched a market cap of 1,10,000 crores. No doubt, I think there's nothing wrong in terms of the company and its fundamentals, but it's just that the valuations were so high. Any sort of slowdown in terms of, even the margins slightly contracting of late has caused a lot of problem. I believe that currently it's quoting at around 26 times forward. They have 1,000 crore worth of expansion. And Divi's, I think, has all the ingredients in place that whenever the pharmaceutical sectors and their fortunes turn around and new money flow comes into this sector, I think Divi's will catch the fancy of investors. I feel he should hold on to this name and even try and cost average here, because I think long-term outlook for Divi's Lab look excellent. In terms of Global Spirit, the thing is that it's quoting at cheap valuations right now, but in terms of the entire spirit market and entire listed entity, entire listed space, all the stocks have kind of massively declined in terms of the valuations. One, because of the gross margins getting contracted massively, plus number two, in terms of the volume growth, the demand in the premium segment has not been very strong. So that is why all these stocks have been languishing. But Global Spirit has a very good market share in Rajasthan market. They are expanding in Haryana. Plus they have some capex plans. So at these valuations, I would not suggest an exit. Hold on, but any sort of recovery to 10 to 20% from here, I think I should suggest an exit.
Okay, got it. That is the call on Global Spirits. And with that, Parthiv, Rajat, we're going to wind down on the show. So thank you, as always, very much for taking out the time and speaking to all of our viewers and taking up their individual queries. We do have to wind down on the show. Remember that you can always email us your queries and we will address them with our experts. It's been a steady session so far. No complaints at all. The Nifty's up 140 points. Nifty Bank up 100 points. You don't want to miss the last hour. Closing bell comes up next to that.